Good morning, Black America. Grand Rising, beloved. I'm Crypto Stock Markets, and here's what's moving the market today. Let me talk to y'all for a minute. What we're watching right now is a leverage unwind. Debt came due, and when debt comes due, the chickens come home to roost. This didn't start the day Bitcoin broke. This started days earlier, and we talked through it in real time. On Monday, the jobs data dropped. The signal wasn't the number, the signal was the money. Money moved straight into short-term treasuries. That move told you risk was being reduced immediately. Capital was going defensive before price cracked. Money always moved before charts do. On Tuesday, we talked about pressure already sitting in the market. Leverage was heavy, positions were crowded. A lot of trades were built on borrowed money. When markets get positioned like that, they don't drift, they snap. On Wednesday, the Epstein conversation resurfaced. The issue wasn't headlines, the issue was exposure. Early Bitcoin involved early big money, early capital, and large positions that the market can't fully see. Markets adjust when uncertainty shows up. Uncertainty tightens liquidity. By that point, capital was already cautious, leverage was already stretched, and tolerance for risk was shrinking fast. Then Thursday hit. Bitcoin broke support. Once Bitcoin broke, everything moved together. Crypto sold, tech sold, gold sold, silver sold. It was the same window, but in the same direction. That's the signal of a system move. Liquidity was being pulled across the board. At that moment, this stopped being about one asset and became about how the system was positioned. Here's where I really want y'all to lock in. Big money doesn't operate with idle cash. They borrow. They use borrowed money to build positions, and they back those loans with collateral. Collateral is insurance. It's what the lender can sell if things go sideways. In this cycle, Bitcoin was part of that collateral. So here's how it played out. Funds borrowed money. They put Bitcoin up as backup. They used that borrowed money to buy stocks, metals, and other trades. As long as Bitcoin held value, everything stayed balanced. Once Bitcoin dropped, that balance shifted. When collateral shrinks, lenders step in. They send a message that says, "Run me my money." That message is a margin call. And margin call gives you two options. Send fresh cash immediately, or the lender sells assets to protect themselves. Most of the time, that extra cash isn't just sitting around. So lenders sell what they can turn into cash fast. That's liquidity. Gold is liquid, silver is liquid, stocks are liquid, so they get sold. That selling pushes prices lower. Lower prices trigger more margin calls. That's the chain reaction people call forced selling. At that point, decisions leave human hands. The system starts making them automatically. Now add the second part I want to talk about, miners. Bitcoin mining is a real business. Real building, real machines, real electric bills, real loans. On the efficient end, some miners can produce a Bitcoin for around $20,000. On the expensive end, especially older setups, costs run $80,000 to $90,000. Across the network, the average cost to mine one Bitcoin is around $58,000. That number matters. Bitcoin was trading around $60,000. That leaves almost no margin. When price dips below that level, miners start operating at a loss. Losses force action. Electric companies don't wait. Loan payments don't wait. So miners sell Bitcoin to keep operations running. That selling isn't emotional, it's operational. Now put the whole picture together. Funds selling because the bank said, "Run me my money." Miners selling because production costs don't stop. Two forced selling hitting the market at the same time. That's why price moves feel violent. That's why everything looks chaotic. This phase doesn't change Bitcoin's supply schedule. It doesn't change how the protocol works. It changes who is holding the asset. Overextended players get cleared out first. Stronger hands remain after the unwind. Every cycle has this moment. This is the cleanup phase. This is the excess being removed. This is the leverage leaving the system. Once that process finishes, prices stop being driven by forced selling and starts being driven by real buyers again. That's the transition I'm watching. That's how I'm thinking about this market. And that's why understanding how money actually moves keep you steady when headlines get loud. I'm Crypto Stock Markets, keeping you 2 steps ahead of the market on Good Morning Black America.